What's up, traders? It's Vlad again, and today we have a very special training on the Paycheck Collector. That's right. This one's pretty cool. It's a little bit longer, but it's going to teach you exactly the bread and butter of how we take a strategy that gives you the ability to make money kind of like a salary, where you have a very high percentage of winning. In fact, before you execute the trade, you'll know exactly what the probability is. You'll know exactly how much you're going to make, and you'll know exactly when you're going to get it. Sounds like a lot of good claims there. But again, this is why I had to create this training to show you exactly how it works, why it works. And again, our community got the benefit of it. And if you're interested in joining that, in the description, you could click. We're going to have our community from school. You could join it right there. And of course, if you love these videos and you love training and you love making money, subscribe to the channel. Enjoy the training. All right, everybody. For everybody here, thanks for being on time. That's what I'm talking about. I knew Sean Barrett's going to be on time.
Yes,
Today,
sir.
I'm very excited. Appreciate you here, bro. And I like your audio. It actually works. I love it.
Hey, it's a beautiful thing.
I know. But thank you, Mark Darling. What's up, man? David Teaser. Sorry if I said it wrong. Bushan, Charles Bray. Appreciate it, Alex. There's a lot of people here. Welcome, Charles. So let's get this going, guys. I want to talk about a couple things. Today is going to be really a good training. If you got any of my messages, I wasn't just pulling your leg. I did work on it. I think you're really going to get a lot of clarity on what the Paycheck Collector is all about. It might be a little longer. It is more visual. It's going to be good. I think it's going to be good, but what do I know? But thanks everybody for joining. I'm just giving it another minute here. What's up, Eduardo? How are you? Be safe out there when you're driving. And everybody else, we're about to get started here. So, so here's one thing we are going to do on this training here, because I want to present, I want everybody to get the same experience. We're going to mute everybody as soon as I start. And we are going to have time for questions. If you want to raise your hand, that's totally fine. I will stop and ask questions if you need it. But again, this is going to be more of a presentation kind of thing. So hopefully you're all good with it. Any questions you have, please put them in the chat so I could see it. It'll be a lot easier for me to answer that. Other than that, any questions before we start? No? Nothing? Okay. Cool. All right. So, Chris, you there? You're gonna put everybody now on mute.
All right, sounds good.
All right, guys. So you're officially on mute.
Including yourself, Vlad. Vlad, you are muted.
Hello? Can you guys hear me?
Yep, there you go. Now you're good.
Okay. Yeah, I was saying if you guys want to curse at me now, you're more than welcome to, because I will not be offended in any way until the thing comes off. All right. So, Chris, can you share? You make sure I can share the screen. Yeah. Right. Perfect. All righty. So we're gonna get this rolling, guys. So today we're gonna present trading the Paycheck Collector. It's gonna be the full blueprint. Even if you're a paid client, I know I explain it a certain way. This is gonna be even a simpler version of it to really show you why this works. And some of the claims that I talk about, the 93% win rate, certain things that I mentioned, there's a reason for it. It's not just marketing stuff. I mean, it helps the market, but it's because it's real. So we wanted to create this training to really give you the foundation and give you the understanding of what it takes to trade this and how simple it really is. Okay. It's very different from what you might be used to, whether it's day trading, things like that. So we'll talk about that. But before we start, I want to talk about who this is not for. Okay. Because you have to be a right fit. I don't want to take this time out right now, whether it's an hour, a little bit longer, and waste your time if this is not for you. That's not the goal here. Okay. So let me just explain what kind of people this is not for. First thing, this is not for those who are looking to aggressively trade on the market. So if you're into day trading, you like the penny stocks or any other gambling type of approach, this is not going to help you. Okay. If you're a huge risk taker, then you will find this strategy kind of boring. Okay. It's not that type of strategy. So I want to make sure if you came in here and you're like, ah, bro, I thought you're going to show me this to the moon kind of thing. Not it. Okay. So we'll see you later, guys. I wouldn't waste your time watching this. This is also not for anyone looking for some sort of shortcut or a get rich quick scheme. So people who want me to give them stock picks so they could quickly trade. I wish that worked, but I'm sure a lot of you I've heard from it does not. And sorry about that. Let me just turn that off. Um, so that does not work. Shadow trading. I've seen a lot of people getting messages who's not me, but asking for shadow trading means I trade for you and our account is set up. That could cause a lot of havoc. Strategies that require what they call diamond hands, right? Where you just hold it until you pray it'll turn around, or stocks that promise to go to the moon, those GME kind of things. That's not what we do. Okay. There's a lot of Discord channels. I could probably suggest some for you if that's what you're interested in. We do not do that. We've seen too many horror stories. So, again, if that's what you think this is, it's not. And this is not for those who have no capital. Okay. So, we have people here who want to trade, but you kind of need money to make money with our strategy and with any type of trading. Okay. So, I mean, you show me a strategy that you could do without money. I know. Now, you don't need, it's not a day trading thing. So, it's not like where you're required to have $20,000. You could start with 1,000, 5,000, 10,000, whatever it is you want to start with. But capital is required. Okay. So, now that we understand who this is not for, I want to explain a little bit more clearly who this is for. Okay. Because again, you have to be a right fit. So, this is for those who are currently working on high paying career, looking to replace their income with investing into something safe yet lucrative. Okay, so there's a difference. So they can spend more time with their families and take more vacations. This is kind of what the people we try to attract. And the reason is because it's hard to replace an income that's already good because you're kind of used to it and you don't want to escape it taking a downgrade. That's not a good idea, or it could be for some, but ideally, you want to be able to live your life and still kind of have a similar income or more. Now, this is for those who are looking for a retirement strategy and are not settling for the broken old school financial accounts that make 8 to 10% if you're lucky. Again, we'll talk about that a little bit more in a second. So, again, if you're retired or you're anything past age, I guess 40, you got to start thinking about those things. um, there's options out there, legit options, and I'll explain those that are old school options that I have as well. Nothing wrong with them, but are they going to make you rich long term? Maybe, but we're looking for the people who are looking to get an account. Just wants to make a lot more than the 8 to 10% a year. Now, this is also for those that are willing to not just learn a strategy, but are willing to invest in themselves to master it. So they have a real skill for life they can use themselves and share it with their kids and other loved ones. We're all about teaching. Okay. And I want to make that very, very clear. We're not here to do anything for you. Okay. That those things just do not work long term. I've seen success for a week, but I've seen some tragedies later on because you're relying on somebody else's skill set, which means you can't make certain moves when things go a different direction. No matter how good a trader is and they're trying to teach you or show you, I would say, it's hard to copy unless you really have a foundation. So what we do is we provide a strong foundation for you to actually know what you're doing. Now, when I say save stocks, I really want to talk about that. What are considered safe investments? Okay. Now, what we're used to is getting money into some sort of an account where you're able to trade, whether it's a tax free account, things like traditional IRAs, Roth IRAs, 401ks. We all heard of them, right? Now, all of these are really designed to save for retirement. Now, what's cool about them, it allows you to invest in different securities like stocks, bonds, and mutual funds. And that's really what this is designed to do. And long term, does it work? Absolutely. Absolutely. There's nothing wrong with these systems. Now, the big thing here is they're just accounts. 401k, IRA, people think they make money. They don't. It's just a place where you could put money in a better tax bracket, I guess, or maybe tax free, depending how you set it up. But from there, you get you get to invest and you choose stocks, bonds, mutual funds, things like that. If you know, like mutual funds are a lot safer because they're more portfolio. Um, Stocks could be a little more riskier, same with bonds. So it really all depends. However, when all said and done, okay, and this is according to Investopedia, historically, with a properly diversified portfolio, an investor can expect anywhere between 7 to 10% average annual returns. I have the link there to kind of gives you a little more explanation of that whole thing. Okay? So that's really what we do. We take these accounts and we invest into stocks, bonds, and mutual funds. And we get an annual return of 7 to 10%. Pretty simple to understand. All right? Now, how do you guys invest in that? So let's talk about what people are used to. They're used to getting something called a fiduciary. Okay, it's someone who is has the best of interest to help you make money with your account. Now they get paid commission, they get paid based on transactions a lot of time. Now, these accounts usually run by a fiduciary who takes roughly 2% of your profits as his fee. Okay, now fees can vary. Okay, sometimes it could be 1.5, sometimes 3. Sometimes there's other fees on top of the fiduciary to take care of the facility he works at and things like that. So all depends. There's not an exact numbers, and they compete, but I've never seen anything less than 1.5%. Okay, usually around 2 to 3. So realistically, that 7 to 10 annual is not really 7 to 10 annual. It's really 5 to 8% annual. Okay, at that point, realistically, if anyone watched the debate yesterday, you saw there's a commercial for Robinhood. They have some great accounts you could get that are like savings account that pay almost the same thing. Or you might as well just open a CD with these types of rates or a higher yield savings account. That's really what it comes down to. These types of percent now, as we talk about the economy and things like that. Our CDs right now is not as like going back to 2008. I'd say don't do that. 2009, we were in trouble, right? CDs were nothing, but right now we could get a decent CD for that amount with no risk. So that's what I would say. Before going into something like a mutual fund or whatever, check out what else they have if you have that type of money. The other thing that we've learned that people have an issue with is it's extremely slow. Okay, it's extremely slow. It takes a long time to make what? To make money. Okay, and you need money. For you to really make a good percentage, 5 to 8%, you're going to have to invest a decent amount of chunk. That's why it takes so long to a point where people retire at 67 plus to see your money. Because if you do the math, will you have money if you start early? Yes, you will. But I mean, I don't want to wait till 67. I'd rather enjoy it maybe now would be good, I guess. So that's been a big issue. Now, with that said, though, there are some great benefits to the fiduciary. Okay. So one of the pros that I see, it's passive. If you want something really passive, never look at it, nothing, that's the way to go. Okay. Because you have somebody taking care of it. They are pretty safe. Okay. So you will make money. There are obviously ups and downs in any environment, mutual fund, things like that. You'll see downturns, but for the most part, you will make long term, you will make money. Again, it just takes too long. And for some, they're just a little too old to start. They're already kind of at that age where, oh, well, I need to make money now because I'm close to retirement, but I don't have that much. What do I do? Or some people just don't have enough funds to make an impact. And sometimes you need 6 figures to really see. I mean, do 8%. You want to start making money, you need money, definitely. But if you want something 100%, I'm sorry, 100% passive that yields returns over many decades, then utilize this approach with all your investments. If that's your personality, you want no involvement whatsoever, not a problem. Okay, like I said, you'll get your 5 to 8 annual. It's passive. You'll need to put some decent amount of money. It'll take time, but it's safe. Now, what we're focused on more, instead of the fiduciary care, We want to do something called the accelerated care. Now, this is a solution where you could make instead of 5 to 8% annual, about 5 to 30% monthly. Now, that's a pretty big claim. Okay. So we really need to understand before getting into anything. And I want to make sure you guys understand for you to make a decision on an investment, there are four things you really have to think about. Number one, amount of involvement, right? So, like fiduciary care, this thing is, I mean, it's pretty much passive. You give it to somebody else, talk to them once in a while, maybe call a banker or whoever, the fiduciary. Hey, what's going on with my account? Boom, that's it. Okay. And there's room for that type of an investment. I don't want to say this is, even if you do something else, there's always room for diversification. There's also amount of profit. You want to know how much am I going to actually take home? Like that would be nice to know. Also, how much time is it going to take to get that money? And what's the chance of profiting? So if you can figure out those four things, we're in good shape. So we understand the passive part. Okay, fiduciary care got that covered. They pay you pay for it, but you get what for the passiveness. With this accelerated care, it's what's called semi-passive. Okay. So it's not as involved as day trading or normal retail trading where you time the market perfectly. Okay, because that's a little too aggressive, that's a little too involved. But you do trade 2 to 5 times a month based on how much you want to make. Okay. I want to make this very, very clear. If you don't want to be involved at all and have someone just invest for you, then this is not the strategy you want. Okay. What I'd recommend, you can stick to the fiduciary care. Okay. Very, very simple. Stick to that for now. Because at the end of the day, if you're on this channel, we're assuming you don't mind being a little involved. You just don't want to be too involved. But you don't mind putting in some trades. Cool. So we got the passive part kind of covered. We understand semi versus passive, and fiduciary does that pretty good. With this, you have to be a little bit more involved. Now, what we got to discuss is the other three: amount of profit, amount of time, and the chance of profit. So, the reason why it's practically impossible to make a living off investments is one word. I'd ask you if you want to scream it out, but you guys are all muted, so you can't tell me. But I'll tell you the word. It's unpredictable. Okay. The reality is, you're working at a job for the most part, unless you're sales and you're only commission, something like that, or you're performance based. Realistically, you have a salary of some sort. It's predictable. Okay. It's predictable. You know what you're getting. And most people want to feel safe. They want to feel like, oh yeah, this is coming in. Um, if you're a business owner, it might be different, but for the most part, we try to stick to something safe. And this is not safe. So in our mind, if I don't know how much profit I'm going to make, or how long it's going to take me to get it, or what are even the chances of me even making it, that's scary. Okay, and I had to learn it myself, and that's why a lot of times I took 20 years to work at a company. These are the real reasons why I couldn't figure it out because fear. Okay, but what if I told you that our strategy, you can actually predict the amount of profit? So you will literally be able to see the exact amount of money you will be putting into your account instantly. The minute I show you the strategy, you'll click a button and you will know this is the amount you will make. Very similar when you think about like a mutual fund and things like that, you kind of have an idea of the percentage, but the difference here is you will see the money come in right away, the exact amount, and you'll be in control of that. The other thing is, we could even predict the amount of time. So you will know how long it will take to actually make it and keep it. Pretty wild. And we'll also be able to predict the chance of profit. Okay, so you will have the probability of you profiting every time. You will have the exact percentage saying that. Now, how I want you to picture that as a casino. Imagine going to a casino and they say, hey, you're going to be playing this game. Now you have a 94, 93% chance of winning. Do you want to play? How many more gamblers would we probably have in this room if those were your odds? Obviously, those are not your odds, but that would be nice. So these are the claims that I'm making, and I'm going to show you in a little bit exactly how it works. So now my goal in showing you the strategy is to show you how we can solve all of three of these, not just one, all three. So it's time for us to execute the Paycheck Collector. Now, I want to make sure we understand a couple things. Number one, we're going to be using something called Thinkorswim. It's a platform. I don't endorse it or anything like that, but it's through Charles Schwab. It's a great program. I use it. What's cool about is it has a time machine. Okay, now so you could actually go back in time with Doc and to any moment, put a trade in, and fast forward and see immediately what's going to happen. Okay. And if you stay till the end, you will receive a free Paycheck Collector calculator that's going to show you exactly how you could calculate your money and make sure you could set up yourself properly for whether retirement or to replace your job. So Chris would be helping you out with that. Just let him know as soon as we're done. Text him, message him on school, and he will send it to you right over. Other than that, guys, I'd say we should be ready to let's do this. All right. So I'm gonna stop the video before we get into it. Does anybody have any questions? You want to raise your hand? I don't know if you want to unmute before we get into it. We should be in good shape though. Anybody, anything? No? Okay, cool. All right. So what I'm about to share with you is the Thinkorswim. Now I want to make sure you understand it. There's a lot to this system. In our academy, we obviously break down all the important pieces, but I just need you to focus on the main ones that we're gonna be looking at. All right. So let's open this up here. You should be able to see my screen. Can everybody see my screen? Perfect. I think so. All right. So let's get this going. So we're gonna start thinking of first, we gotta understand what we're gonna be trading is options. Okay. Options are a lot more lucrative when it comes to money, and it's easier to make money. And we're gonna be using something called spreads. So the goal here is not to give you every nook and cranny, because obviously it's gonna take time to build the foundation, but I want to show you how to execute it. Okay. So first things first is, what's cool about Thinkorswim or any other system. Again, I use this. I could trade in other ones. It doesn't really matter, but we're going to use overall, we're going to look up SPY, the stock SPY. Okay. And these are called option chains. So option chains are things and options. Now, if you don't know it, it's okay. We have other courses. For now, just kind of try to imagine what I'm doing here. Later, I could tell you exactly how you could get more knowledge on this. So we're going to go and we're going to say we have a stock SPY. And right now it's at 545. Okay. So usually what I'm going to be looking at charts. And I could pull it up here and you'll see that here we got the stock chart right here of this stock. Now, there are a couple skills that obviously, like I said, you need a foundation of. One of them would be chart reading. In this case, I could see based on this, it's hitting this called the Bollinger Band. And in my opinion, it's going to go down. Okay. So when I think it's going to go down, what I want to do is I want to go to these, what we call option chains, and I want to go to around anywhere like maybe a month, maybe a little bit more. So we're going to go to 39 days. Now, first, what we're going to do is, because this is live, I can't get you results. So I'm just going to pick a random, I guess, day. We'll go back to, I don't know, let's go to 2021 February, and we'll pick, I don't know, February 12th, I guess. All right, so we'll go February 12th, and I'm gonna go over here. I'm gonna put what was it, 13? I forget what's the hour. No, 15 is the 3 o'clock. So I'm going into back in time, and the reason I'm doing this so I could show you results quick. So when I go to chart, you'll see now. Where is it? Hold on. Oh, there it is. Okay. So this was back in 2021, and you could see here where the chart is. Okay. So our goal is going to be to see if we could invest in this, okay, and make money predictably. That's the key. So let's assume that we think that this stock is going to go down. Okay, we decided that thing is, you know, ready to go down or whatever it is. So what we're gonna do, basically, what we're saying is we don't think it's gonna go up. Now, what we're used to is if this goes up, you lose money. But what we're going to provide you is insurance. We're going to give you a space of amount here that even if it goes up, you still make a percentage, which could be 10% or whatever. So how do we do that? So you could actually be wrong and still make money. So this is the trick here. If you go in here, you go to around, we'll say 35 days right here. Okay. And we have all these numbers. So these right here in the middle are strike prices. But what I'm going to do first, I'm going to go over here and I'm going to switch this to something called the Paycheck Collector. So this is something we designed internally here that shows you probabilities. Now, what you're seeing here, this is pretty cool. It's letting you know what is the probability of it getting to this number. So let's just say we go back to this chart and we say, you know what? I want to know if I invest here, and I'll show you how to do that, you could actually collect a certain amount of money because you're going to be selling an option. Okay. So I go back here and I say, okay, cool. I'm going to go in and I'm going to look for a number. Now I'm going to give you a little secret. There's a thing called delta. Okay. There's a reason why, but we want to start around 0.07 because this gives us the best odds. And then usually if you look here, you could see right around this area, it's about 93, 92%, sometimes 94, depending. So I want to start around this area because what this tells me is my probability. Remember we talked about probability? This is letting you know that this is your probability of being profitable. Because it says OTM, which is out of the money. Again, if you don't understand options, means it never will get to that area. And in this type of trading, it's very simple. If it goes down, you make money. If it stays still, it makes money. As long as it doesn't get to that area, you're in the money. You're good to go. Because what you're doing is you're selling. So think about that for a second. It literally tells you the probability. So let's just say we look over here and we'll go to the 0.07. Now, this is a great place to start. And again, the 0.07 is based on volatility, based on a few things, based on the market that lets me know this is a good place where I could go in and you should feel comfortable with that percentage. So let's just say I'll go in this 0.07, I'll go and I'll say, you know what? I'm going to click on this area right here, which is 340, and then I'm going to select this one. I'm sorry, wrong one because we're going the other way. So we're going to, here we go. Okay. So in this case, what we have here is called a vertical spread, okay, which tells us how much money we're going to make. Okay. Now, for example, this says 4 cents. So let's just say I took in and I invested, these are called contracts, 50 contracts. I press confirm. This will tell me how much money I will make instantly. So the minute I click this button, $200 is going to go into my account. Okay. Nothing crazy right now. We're just looking at small numbers here. $200. However, they're going to hold 4,800 of my money. They're not investing it. They're just holding it. Okay. So if you do the math here, that's about 4%. So think about this, and this is the most safest thing you could do. Just to give you an understanding, 342. Okay. If I go to the chart, this is a 310. That means in a month, okay, in a month from now, 342 is all the way over here. That type of move hasn't happened in ages. So something big is going to have to happen for that to happen. Okay, so and overall, these little green lines are called Bollinger Bands. Most of the time, 90% of the time, they'll trade in it. You could see they almost never go through it. So now we know we have these Bollinger Bands protecting us, and we're all the way here to collect 4%. And it even tells us the timing. So March 19. So if I just hold this and do nothing else with it till March 19th, which is about a month or 35 days, we're just gonna the money's just gonna be it's gonna stay there no matter what, but our $4,800 will be released, and there's our 4%. That is the most safest thing you could do with this. Okay. And this is like, oh my God, like it's never gonna get there. Not only that, this thing here says probability of touching. This actually tells you the probability of it even coming close to that line. So so we know now that we have a 92%, 93%, yeah, 92 point something percent of being right, that it'll never out of the money means it'll never even touch it. And 15%. And what I mean by that, at the end of the contract. So there's really almost no, very small chance. But this one tells us even the remote closeness of it. So it's that simple. Now, as you get closer to the stock, you're going to make less money. As you get further, I'm sorry, if you get further from the stock, you're going to make less money because again, it's safer. So just so you understand, the further away I go, it's a lot safer, the less you're going to make. The key here is figuring out what percentage you're comfortable with. Okay? So in this case, you know what? A lot of our students say, yeah, well, depending, we could find different things. There's a couple things you want to know how to make more money and how to manage risk. One is the time. The more time you give it, the less risk you're taking, technically. So you're going to be able to go further out. So the more money, the further out you could go. I mean, the more time. So time is a big factor. We like to be a month away because you could be wrong, you could be right, and I'll show you even how to get out of it quicker. Okay. So in this case, I'm gonna say, you know what, I think I could be better than that. Again, one of the things we do teach is chart development. Most of our students know that the minute they look at a chart, oh, yep, we know exactly which way it's going to move. Probably coaches with 10 seconds, students maybe a minute, depending on the student, some 30 seconds, some 2, 3 minutes, depending how long they've been in the classes. So it takes a little time to learn, but we have a great program for that. But check this out. What if we come a little bit closer? What if we go into, because what you don't want to do is guess. Oh, well, what if I put 330? Because 330 is still very safe. But that's just my opinion. Let's look at the statistics. Statistically speaking, 330, okay, is 94%. Okay, 94%. So think about that. 94. So what we could do now is look at it and say, what if we put it in here? What if we go in and we click this button here and this, oh, I keep doing it the wrong way. Okay, 3 cents. So actually, no, I'm sorry. Let's go back to that again. That's what we did before. Uh, let's do 325, I meant. Okay, so let's go into 325 right here. And we're gonna go in and click here, click here. So am I doing this right? Why is it going on here? I don't know why my button won't let me do this. There we go. Really weird. Hold on. Sorry, guys. There we 341. I don't know why it's doing debit spreads for me. Here we go. All right. So in this case here, let's go back to 325. Okay. So this has 4 cents. Okay. So this is letting us know that it's, sorry, I keep messing this up. 325. There we go. Now, what we want to look at is this number here. 10. I don't know why it's doing this. For some reason, give me a second here, guys. Should I refresh it here? So sometimes because we're in a time machine, the time machine could be a little laggy. So I apologize. Let's see here. Yeah, I don't know why it's doing that. I apologize here. Okay. So one of the things we want to make sure when we create, now, why am I selecting two of them? This is important to know because the reason we're selecting two different strike prices So you'll see I'll click one, then I'll click on the other because we want to make sure that we protect ourselves. So it's something we teach. It's called a spread. Without that, you'll make more money. However, the issue is going to be that if something happens, you're going to be in trouble. That's exactly what happened to this GMEs. It's because you have Oh, you're right. I'm sorry, Brian. Thank you. Thank you. So I'm used to using the other system, and I usually switch them around. Thank you for that. I appreciate that. Um, so yeah, well, let's go back to 325 you said, right? So what he said was right. We're going If you look over here, guys, we were on the upside, so we need to look at the call. I got a little too excited and looked at the wrong side. So this is the call side. My apologies. Thank you. Thank you for that, Brian. So what we want to do is, like I said, go to delta 0.07, which would be around here. And you could see the percentages here. Okay. And what you want to do, we're going to try to come a little bit closer. So we talked about going around, we'll say, let's go back to our chart. We'll say 325. Okay, because that looks still pretty close. I like that number. So 325 would be around here. Now you could see how much further it is in here. If we take this 325, we press bid versus ask. Okay, now this is paying 85 cents, guys, or 95 cents. What does that mean? If I click here, that's paying us 455, I'm sorry, $45, and it's only going to take $455. What does that mean? That's exactly 10%. Okay? That's 10%. So if we invest in this, let me show you this chart again so you see it. Over here, that's 10%. That means even if it goes up and stays, you're the whole time you're in good shape. Would I do this trade? I don't know. The key is how safe you want it to be. You control the safety of this play. Okay. You could be here, you could be here. Now, because I made a mistake, silly me, I apologize. I don't think I've ever made that mistake, but of course, today would be one of those days. 335 to 3. So if I do 335 right here to 336, and you could see here, we're collecting, well, in this case, $10. So that's probably not a good one. We'll do so you could see, depending where you're at, this is because we're so far away, it's not gonna happen. So you want to look at the percentage, okay, and see what the percentage you're at. And in this case, we could see here probability of the money. Here it's 0. Okay. So we need to be probably a little bit closer. So that's how that works. Let me show you another trade right here real quick. So let's just say we're at 339 and we want to go a little bit, maybe 335. So now we go back to our thing. 335 is around here. Oh, let's go back here. No. Sorry, guys. 335 here. You could see it right here. So you go to bid, click ask, and it'll tell you the exact amount there. So it really depends on a couple things. One, do we know our probability? Yes. Okay. Do we know our timing? Yes. And do we know how much money we're gonna make? Yes. Okay. We're gonna do another one, but before I continue, I apologize. I made a mistake on a couple of these things here. Let me see here. Do you want to sell calls that are in the money? Yes. Right. Let's try. What is it right? Did I have it set up wrong? Change put and call at the bottom of your width. Where? Oh, Brian, you want to show us? That'd be great. Because I don't know, maybe I'm doing something off today. I don't know what is going on this chart. My apologies, guys. I think this is set up a little differently from Usually my students have it a little differently set up. But before we go on, I'll do that in 1 second. I want to stop. Any questions so far, guys? Again, I apologize for the little bit of the confusion here. I want to stop, see if there's any question. Yeah. No, Chris, I don't know if you see anything on your side.
1 second here. If anyone has a question, you now should be able to unmute yourself.
Okay, cool. Okay. Oh, somebody popped up there. No.
Hey, Vlad, can you hear me?
Yes.
All right. So the gray stripe down through the middle there where it has all your dates, and then over to the right where it shows the strike, right
Yeah.
click on the strike part there. Just
Where?
anywhere. Yeah, just right click anywhere on that.
Uh-huh.
Then do cell, then
Yeah.
vertical. And that puts it at the bottom. And then you change
Oh,
put or call there under type. And that's where you also manipulate your width and your
perfect.
strikes
I
for
don't
your
know why it doesn't, but I usually do it with control. It usually works. I don't know why it's not working for.
either way, but that's the way I do it. I don't know if it's better or worse. It's just a different
Okay.
way.
All right. I appreciate that.
You're welcome.
Thank you, sir. Thank you, sir. So,
I have a question.
yeah.
Um, so I'm new to this. Well,
Yeah.
I'm not new to it, but I haven't been attending and that's my fault. I've been slack. I've been attending the actual 1 p.m. sessions like I should. So my question is, how do I get myself up to well, not how, but what I mean, what are the steps I need to do so I'm able to get myself up to speed, and then also when I jump on the calls, I'm not lost. I mean, I don't
Yes.
know if that's actually a question. I don't know. I don't know if I'm asking a rhetorical question. I don't know.
No, 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 no. I'll go over that in this presentation in a little bit. So yeah, this is something what I wanted to do is show people kind of how to execute it. I don't expect perfection because you need to understand certain foundations, but I want people to know, okay, at the end of it, people want to know what is a paycheck collector? How does it work? What's the, what I wanted you to understand the basic concept of it, and then we'll talk about how do you build that foundation to get to that point. Does that make
Okay.
sense?
Okay. And so I'm taking that the paycheck collector is what helps you. You know, you like I think you were saying that the probability, how much money you're gonna make, when to exit, and when to get into the trade.
Yes, it's going to help you basically figure that out as far as probabilities. Yes, exactly.
Okay. Okay. All right. Thank you.
Yeah, no problem. All right, cool here.
Okay, so I have a quick question
Yes.
regarding the strikes. Do you typically choose them so they're one step apart, or do you choose like 2 to 5, or do you look for the open interest to go and find the best matching pair?
Oh, as far as what kind of spread I'm putting?
Right. Yeah. Whether it's the strikes are only 1 apart or 5
Yes,
apart.
good question. I
Mhm.
always try to do one apart because um you don't want it to end up in the spread. Otherwise, because you can't, you're making a spread to protect yourself. But if you
Mhm.
make the spread too high, one, it costs a lot more money because you're increasing the spread. Two, you're putting yourself in harm's way. So the closer the spread, the chances of you, losing becomes so small. Because God forbid it does end up going through yours and you don't get out, you're protected. But if it ends up in that one little area, the chances are small, but you have to get out of it before it does it. So I don't like to keep the spread too high. It's just more risk. So I
Okay.
always do I do it sometimes? I don't teach it because I have a responsibility for my students who are new. Once in a while, maybe I'll go two, but no more than two. And that's even rare. I'd rather just make a little less and keep my percentages high at winning.
Okay. And then, yeah, now, so you're trying to sell them out of the money so that you expect them to remain out of the money? Because it looked like you were using the
Yeah.
probability OTM column. So you
Yes.
want it to
So if
stay
I'm
out.
over here, I'm sorry. Yeah, I don't know why I'm having some difficulty. Maybe I'm having a brain fart a little bit, but usually, yeah. So if I'll put it something over here, 350. The chance I don't want it to touch.
Okay. So you'd be selling a call that's high and out, or you'd be selling a put that's low and out.
Right. Selling
Okay.
and buy.
Gotcha. All right.
Does that make sense?
Yeah, it does. Thank you.
Yeah, no problem. So yeah. Um, so the big thing is going to be here for us to understand that it's very simple to figure out the probability. and also figure out now with the time machine, you can figure out also the future just by trading as well. So in this case, let's just say, you know what, I'm gonna have Brian, you tell me the price. I'm gonna have you choose the strike prices for me. How's that? We're gonna do
Okay.
it one. You tell me where we're going.
So just as far as I look at the Bollinger Band and kind of figure out where I want to be, get some information on that. I also take consideration if I'm at the top or the bottom of the Bollinger Band, because ideally I want to sell whenever the price is going down and or if it's going up, you know, kind of like whether or not I'm doing a bull put or a bear call. On this one here, yeah, I like the 330. And I also normally do 5 wide. I do understand your argument where we normally do 1 wide,
Yeah.
but I look at that and I want to be around like a 0.2 delta, which is like around 80% profitability for me. I understand that 90% safer. And again, it comes down to your risk to reward where, and you know, do you want 40 cents per contract or do you want, you know, 90
Yeah.
cents per contract?
Yeah, a lot of times people who do these type of trades, they don't want to be too involved, and when you're not involved, sometimes you miss. You have to pay attention to those type of things. Not that it's wrong, but it becomes a little bit more riskier. So you're saying 330, so you would do 330, 355, or
Well, no, I do
sorry,
330 and
330, 30.
335.
Yeah,
And so just the 5 wide there. And also it's my understanding brokerages won't let it expire in between the two. Like you can't get necessarily caught too bad where it'll go against you. But now I would take that, I would enter it down at the bottom. I'd look at the um, price that it's going to give me. And then I kind of make a judgment call out of that. I know if I'm getting $1 or $1.50, that's
hmm
high. And I need to revisit some stuff going, do I want that risk? Or am I placing my trade right? Because maybe I hit something wrong. So
right.
for something like that far out, I want, you know, 80
So in
cents.
this case, you would do 330, 335, like this.
I would start there. Yes, sir. I'd look at that.
Okay. Now, the percentage there is going to be a little lower. But this is a good point, guys. I want to make sure you understand. Now, you obviously this gentleman's a little bit more advanced. Now, when you're a little more advanced, you could do different things. Would I do this? I've done it before multiple times. If you look at what he's doing here, he's collecting a decent amount of money. Was it $2,400, something like that? It would be.
Right.
So I want to make sure I put it in right. Is that right?
That looks high. I'd actually kind of go back and I would tweak that because I normally
Yeah, I was
want
gonna say
credit to be closer to $1 ish.
$1. So couple things with this strategy. One, don't be greedy. So you see how he said a lot of people will be like, whoa, that's a lot of money. You want to be at around $1. So that means you don't just go into it and just say, yeah, that sounds good. That sounds good. Maybe you go a little further. You go a little further so you could decrease that risk.
I'd also look at different timelines. Like I'd look at the daily or, you know, just different things and try to make sure all of them kind of agree.
Mm-hmm. Yes. So there's a lot of different things with charting too that you want to understand. But overall, from what am I right? Basically, so it sounds like you're kind of doing a spread, collecting $1, and you collect it every month on a monthly basis.
I trade weeklies a whole lot. And then
Weekly.
like right now, I don't suggest this, but I'm in like 1 DTEs on SPX.
Okay. Well, I appreciate you sharing that. Thank you, sir.
You're welcome.
Bro. So the big thing here, guys, is now what he's saying there. He's a little more advanced. Obviously, as you get more advanced, things become more different. I just figured this out, guys, why my spreads did not work. The chart was over here. It was supposed to be over here. That's why it wasn't working. I knew something was wrong. But yeah, so we could do one more chart just in case. But the key here is I'm going to show you one more time, guys, how this works. So in this case, okay, we got this $400. Now it's actually going to work. I'm positive. And we think this is going to go down. I'm going to execute the whole thing now. Okay, so I'm going to go to the trade and I'm going to go to around 400. Okay, so if you look at around 400, that's around right here. You could see the probabilities. Okay, so in this case, we're going to go on the call side. Why? Because you could see it's over here. So we would execute something like 400, 405, right around there. If we do that, again, we want to look at the percentages here. So in this case, if you go back here, okay, right here. So if I go to 400, you could see we have a 60% chance. Do I want to risk it? Maybe not. We want to pick, we could start off at 414, but let's just say we'll do something really safe. We'll do 410. Okay. If I select 410, okay. Oh, is it happening again? Bid. Oh, no, right here. We're going to do bid ask right here. So that's 14 cents. Now we got to go. Okay. That's $70. Now, doesn't sound like a lot because we only have 5 contracts, but 70 divided by 430, that's 70 divided by 430. That's still 16%. 16%. Think about what, so that means we have a 88% chance of winning at 16%. And then you could trade more contracts if you want. So let's just say we got $350. It'll hold to 2150. Now we could execute this. The minute you execute that contract and it goes through, guess what? Now we have a situation. There it goes. It just went through that little beep. That money goes right into your account. And now we just wait. Okay. As we wait, every day we wait, it's eventually going to expire. Now, we could now look at a chart here and we could see how much we're making. So right now you can see we're losing $12.50. What I'm going to do is what we basically said, the chart is around right here, all the way up here. If this starts going down, we could collect money early. We could actually get out of it. Or if it continues going up, as long as it doesn't get here, we're still fine. So we could take now is go in here, click on the next day, which would be the 16th because there's a weekend, it looks like. And let's see what happens. So you could see here, it went up a little, came down, but again, we're all the way up here. Then we could look at where we are with our money. Looks like we're just kind of break even. Something, well, we have to wait till it rebuffers here. And then we could actually look at every single day and see how it goes. So we'll go to the 17th. Looks like just because based on the chart, I could see. So you could see here, you see how it went down here? Because it's starting to go down, it's going to change the amount of money our contract is worth. So again, with the time machine, you got to give it a little bit of time to buffer up here. But this number is going to show us either positive or negative. Now, there's a way you could set it up automatically. So if it gets to a certain number, it just exits you out. Sometimes you could get out, for example, if you collect 16%, but you get 10% of it, it'll just get you out of the contract right away. So if it goes down in our direction, that'll happen. Of course, today, for some reason, okay, it's not showing me anything. So let's go to the next one here. Give it another second. So let's look at the chart now. So you could see the next day went down even a little bit more. So it's going in our direction. And guess what? Here's the other cool thing. The contract we put in, now we could see, look at this, the percentages of what could happen. Now it's going to be lesser a lot of times because of the fact that time is moving. But we're still, look at this, we're at 89%. And what I see here, we're up $25. So if I could get out of this contract now, collect $25 if I want to, or I continue going with it and it's my choice. Everything could be set up automatically for the most part. So you can see it's moving. We'll do, let's just say we'll go to the 23rd just to speed things up here. Let's see what the chart does here. Now you can see here, it really went down. Okay, so we'll do, let's just say 9 a.m. that day. Oops, 9 a.m. that day to, we'll say 9:50 a.m. Okay, just to see where that chart was at. So you could see this is where it was at that moment. So this really went in our direction. And look at this. So now we're up $200. So all I have to do, instead of waiting, I could have set up an order here. Press create a closing order. And now just buy it out and I'm out. So it took me 4 days to make $200 and that was it. Now, if it didn't go my direction, I could have just held it on for a while and done what I had to do and whatever. But because we read the charts properly, we could get out of it quicker. Now I could get back into it in 4 days, reinvest that money, and make more percentages. That's how you could fluctuate from 5% maybe to 30% because you do it multiple times. Some of the stuff the other gentleman was saying, again, that's more advanced. If you once you get really good at it, you could say, yeah, you know what, I don't mind being a little bit more extreme. I'm teaching the people who are still working, don't have the time, they just want to do this until maybe later on they could learn it. But it's that simple. It gives you the probability, it gives you how long it's going to take. All you got to do is execute it. It gives you the answers. And I'm sorry, guys, because my charting was a little messed up, I guess. My apologies on that. Anybody have any questions? Let me know. I appreciate it, Ben. Sorry. Yeah, so the chart before was like, I don't know what was wrong with it, but it was like on the other side. Yeah, so sometimes this happens. Anybody have any questions before we move on here? Let me see here.
You guys should be able to unmute if you have any questions.
Okay.
Yeah, I had the one question that's in chat about deciding which stocks to use. I know you can use this strategy with all kinds of stocks, but I wonder if you had any thoughts on that.
Yeah, we so what we do in our class, we always look for specific liquid stocks. They can't just be any stocks, because then you'll definitely get in trouble. You want them to be stocks that are like SPY, big time stocks. So anything over 1 million in volume is usually the stocks I'm looking for, minimum, and they shouldn't be cheap stocks. So those are the main categories. So, but also not the ones that fluctuate. So anything like if you're going to be trading anything that's kind of like consistent, usually above the 200-day moving day average, 50-day moving day average as well. Do I use it? I do use a scanner. We use FinViz in our academy to really kind of break down specific stocks. So usually what we do is the people that graduate we'll have posts for them to show different stocks. Am I still sharing my screen, Chris, or no? Not anymore.
No.
Oh, okay. Sometimes it's hard to get out of those things. Yeah. So yeah, either like I'll do like 200-day moving day average above that or above 50-day moving day average to make sure that they're bullish and they're consistent. So anything up and down like that, obviously I wouldn't do that. So we usually provide those type of stocks once you understand the concept. We don't like doing it for just people who are like, yeah, just give me stocks. Well, you don't know exactly what you're doing. So we want to make sure.
Real quick, Vlad, just to kind of add on to that. Because I know David, you and I have spoken, and Brian, you and I have spoke. There is a video in the school. It's called The Bounce Profit. If
Yeah.
you're curious of how Vlad actually goes about his processes of finding those liquid stocks and like figuring out where those proper entry points are, I can send you guys over that video if you need like another refresher, because he breaks down the idea of like the scanner using FinViz, charting on stock charts and all that stuff. And of course, anyone else who's interested in seeing his process, you could just message me personally and I can get you access to it.
Cool. All right, let's get back into this. I got
Okay,
some more
well,
stuff here.
One more quick question, if I may.
Yes, sir.
So it doesn't matter if it's a specific stock, a sector, or the entire market, as long as it's tradable and it's consistent, and you're looking for above the 50 and 200 moving averages.
Yeah. Yeah, those are there's a few other things like we look at. I know a lot of my coaches, they come up with different stocks, but liquidity is the number one thing.
Right. Okay.
Liquidity is everything. Because if it's not liquid and you try to get like what I just did, like getting out of it, that could be a problem. You could be right 100%. I'm sure. I'm sorry. I don't remember the gentleman that was talking before that explained. Was it Brian? I think Brian was, right?
Yeah.
Yes. You know, like if he would have done that same play, he probably would not have done it on a penny stock because he won't be able to get out of it.
Oh, yeah. Okay.
You can't
I'm
get
tracking.
filled.
Thank you.
No problem. Cool. Anything else, guys? Cool. All right. just want to show you a couple other things here. Can you see my screen now, Chris?
Yes.
All right. Yeah, so I wanted to just kind of share it. So I made this chart based on somebody investing $10,000. Okay. Now, percentages could be different. Okay. But assuming you do this for a 1 year at 10% profit. Now, I did a trade just now that showed you it was 16%. Some people will, most people will not take 16%. Usually they'll take about 10. That's what we teach, just for extra safety. Now, if somebody like Brian, who's a little more, there's people who are going to do that. Nothing wrong with it. We like to keep people safe. What you decide to do after that, obviously, he knows the risks you're taking. But if you want to keep really safe, 10% is a good number per month. That would bring about 213% return. Can you do 20 to 30%, 40%, though, especially if you're collecting $1 every time? Absolutely. Absolutely. But I don't like to make those claims because people, don't believe that. And, because it's, whoa, how much percentage? But 10%, that's 213% return. That means $10,000 turns into $32,000 over a year span. But I like to keep it even projections even differently. But let's just say we keep that for 2 years, the 10%. You look at that and you could see 98,000, that turns into $98,000. So that's how that compounding works. But again, Brian, because he just showed up here, will tell you, you can't just be passive. You can't just click and forget. You have to still watch it, but you don't have to be overly aggressive day trading. You could still watch it carefully and, just pay attention to it. You could set up an order, which we always teach. Set up an order for if let's just say you're collecting 16 or 10%. If you collect 5 in 5 days, like we did, or whatever we collected, 10%, let's get out of it, take that money and reinvest it again in that same month. And again, that's 213% consistent. But even if you take lower percentages, so I look at it like, let's just, instead of showing you, oh my God, you could be a millionaire in 3 days. What if you just simply you're just scared to do this? And it's like, no, what if you just do 4%, or 5% or 7%? You could see here, a 4% account could still grow. This is based on, again, $10,000. You could turn that $10,000 into $105,000 in 5 years. That's a little bit better than 401k and those type of things. But you got to put in a little bit of watching and you got to learn it. The key is you got to learn and you got to master it. It takes time to master these little things. And you can see 7% if you do it consistently, 7% year over year. Obviously, you're seeing big numbers if you consistently reinvest the same money. You don't even need to go that crazy. So you could even do 3%. A lot of people, what they do once they get to like $250,000, they don't use all that money, or they'll just try to make 2%, because at the end of the day, 2%, you probably have a 98% chance of winning every single time. So those are pretty good chances. So realistically with this, if the less percentage you're using, you're making it more passive with investing less of your total. Okay. And of course, you make it more passive with making smaller percentage as well. So you make less, you're giving yourself a lot more freedom, a lot better chances to win. But again, 10% seems to be the number that everybody could do comfortably. Cool. So the question is, why are we teaching this? Okay, a lot of people asking like, oh, why don't you just do this and that's it? So we really believe in helping the ones that work so hard but feel like they are trapped by their paycheck or just need a solid way to retire. Okay, because those are the two big reasons people come to us. Again, if you're looking just to kind of make, just day trade because you love it, I just don't do that type of stuff. So we just, that's a different crowd. But what we want to do is provide you true freedom. Okay. And a lot of people kind of asking, okay, well, what do you mean freedom? Is it like free? Is it like what it really is? So I want to break that down. At the end of the day, the people we took in our academy, they work hard. And a lot of them are very successful, some of them are very successful business owners. Some people are middle class, some different crowds, but they all work hard and they're all pretty successful at what they do. But what they're missing is family time and vacations. Because a lot of times when you're working and you're making money, with a lot of money comes a lot of responsibilities. Just how it is. So we try to kind of understand that. And, a lot of people kind of go through regret over time. The other thing is health. We try to revitalize your health. So people have come to us with cognitive issues. I myself had some issues when I worked, some anxiety issues because of the fact that it's just too much stress. I was managing over 400 people over a 19-year period. Could definitely get to you. And empowered choices. So being able to wake up and make a choice that you want instead of what your boss wants. If you want to do something else and not hit the alarm clock today, you should be able to do that. And me personally, I like to work. I mean, I don't, and I'm not the person saying, "Oh, I'm on the beach all day." That's not my thing. I mean, I like to go on vacations. I go on a decent amount of vacations, but I like to do work. The only thing is I want to do engaging work. I want to do things that get me going. And for me, it's about contributing to others and helping others, those type of things, or growing with something, helping other people grow. I wasn't a fan of having a boss. Just was not. And dream fulfillment as well. So being able to say, hey, when I was a kid, when I was young, I wanted to do this. I wanted to own some sort of cool business. I wanted to, do some sort of sport. Like we have a guy, Felix. I don't know if he's on today. He said he was going to be on, but he's actually, he's now a professional disc golf player. I've never even heard of that, but that's what he does now. So it's but he left his banking job. He trades the Paycheck Collector and he literally just does that and he loves it. And just overall optimized lifestyle, and more importantly, meaningful impact. So helping others, especially your kids, family members, other people, and maybe start your own business to help others. Like those are the things we love to see. So we just believe in living life out of fulfillment and not survival. That's pretty much what it is. And if it's something you feel that could be that you're missing, maybe you have a point in where you're working so hard that you don't want it to be where you're 20 years from now and you just feel regretful because you could have done something. Unfortunately, a lot of people do have a lifestyle to fulfill. They have medical benefits. They can't just leave. So this helps to figure out how do we make enough money compounded where eventually, okay, now you make a choice. I'm already making it here. I was able to do it while working. Can I now leave and do other things? And that's what this formula is really designed to do. That's why it's called the Paycheck Collector. So you could collect it over time. When it comes to next steps, a lot of you guys were asking, right? The key is path to mastery. The gentleman earlier asked, like, I'm not sure. I have all these, there's so many steps to this. There's, this, what do I say? The strategy is simple. Okay. And I'm going to, just so you guys know, I'm going to refilm and post it here just because I messed up a couple things here to make it easier. So I will do that for you guys in the next few days. But here's the thing. It's simple, but it's not easy. Okay. This training is a great start, but it's not the exact magic bullet to get you to becoming a master of compounding from the market. It's just not, because you need to know, like what Brian said before, charts. Those charting itself is huge. Like he's looking at the Bollinger Band. All these little things, they're not hard, but you need to learn them and you need to have a great understanding. And like I said earlier, there are no shortcuts to this. The point of this training is to show you how simple it can be. But the magic happens before the trade and after the trade was placed. So those two things we didn't really look into as much, but we will. And I want to go over that. Number one, just before the trade, there are things you want to know how to do. Number one, setting up your workstation. How do you get all the probabilities? How do you get all that? How do you get into the time machine? How do you work the time machine? Two, understanding options in general and what spreads are. Anybody, you could ask anybody in here, if you don't know what spreads are, and this is how serious it is. Like if you go to any of these platforms and you try to trade them, they want you to test. You can't even get approved to do it. They want you to take a test. They want you to prove that you know what you're doing. A lot of our students have to go through that because it could be dangerous if you don't know how to set it up properly. So those are the things you want to learn. And picking the proper stocks is crucial, especially when you're dealing with options. A lot of you guys had this question. You need to know how to screen for them. You need to know when's a good time to get it. Okay, you might have some of your favorites, but you got to know how to do it. Evaluating the charts properly to predict the overall movement. So Again, there are certain things that we could look at right away. Like I knew that stock right away. Okay, it looks like the direction is going to go down. I could have been wrong, but a lot of times we're not. Our coaches on average, we did the math, we're about 94, 95% accurate on the movement of those stocks. As again, because we share it with a lot of our clients. So yeah, that's extremely important. And all these things are before the trade even happens. How to properly get filled on an order. So that's another thing we talked about. Sometimes you could put in a stock, you could go into something, but when you click on it, it just doesn't go through because you need to know what number to put in there to make sure to get that probability. Again, all these things are easy. They're simple. They're just not. You just have to understand them and you have to learn. It's not like I said from the beginning. No shortcuts. It becomes really easy once you learn it all, though. Once you get it, it's a click, click, click. A few minutes, you're done. Now, when it comes to after placing the trade, you got to make sure you know how to create a proper closing order. So when you're done, again, we're trying to make this more passive. You could set it up automatically to leave the minute there's a certain profit. So we want to know and have a formula when to do that and how to do that. Making quick decisions on when the strategy doesn't move in your direction. Guess what? I know this is just a rumor. The rumor has it sometimes even though you guess and you put all this work in, it still goes against you. That does happen, believe it or not. You got to know how to address that and even profit from that. Or how to profit earlier than 30 days. So you saw I just showed you how to profit quicker. We show you how to set that up as well. So that's extremely important. And how to monitor the trades and still be able to live your life. So instead of just sitting there in front of a screen, how do you set it up, not worry about it, and maybe your phone will tell you when to look at it, okay? How to turn a losing trade into a profitable one. That is very important. You could actually reposition a trade where if you're losing, all of a sudden, you're like, I don't want to lose it like this. Let me do a couple other repositioning and boom, now you're in profit, or you just saved yourself a huge loss, maybe a small loss. Those things are very important. So with that said, excuse me. But like I said before, we can't review every single step in one trading, okay? So you can utilize what you have learned and you might have some success with it. But if you want to master a real skill that will pay you over and over again, then what you need is honestly, you just need some coaching. Okay. And that's something we do, and you don't have to go through us, you could just find a right coach. But I want to kind of give you an understanding of, based on our experience, what does coaching actually means? Like, what does really work? Because if you've ever taken a coach, we hear a lot of clients because we do interviews, we do consultations, and we try to figure out what it is that you are all about and what your situation is. And we have a lot of people, unfortunately, who took coaching. They told them it's going to be coaching, but it was just videos, or maybe it was just this big group. So I want to kind of give you a breakdown of what it really is. Number one, continuous support with daily lives trades. This is something we do. And again, we take one of our key core competency of the companies. There's no shortcuts. Okay. We do not believe in that. We don't believe in, hey, let's just throw people in something. So we make sure you have a human element. And this business is very hard to find that. So continuous support. Every day we have coaches going live in the market. You could very similar to this situation here, except every single day, all the time, talking about real trades, any questions you want. So you always have somebody there to hold you by the hand. And busy professionals have busy schedules. So we also do on-demand one-on-one coaching sessions based on your schedule. This is important because when I say one-on-one, I don't mean this is not one-on-one. I could talk to, I know somebody's on the screen here. Hello. I could talk to maybe Chris one-on-one, but there's other people who are waiting. That's called groups. Okay. That works to some extent, of course, but one-on-one is where the magic happens. That's really when you ask anything, you understand everything. And it's good to have somebody who say, hey, can you work my schedule? Because I'm a busy person. Accountability through trading and coach. This one's big. I'm going to tell you right now, a lot of people understand what we do, but they stop doing those things. Accountability is very important. We make sure we have trading logs where we hold those trading logs accountable to make sure, hey, are you doing your work? How are you doing? We reach out to you every week. Our onboarding person, every week she reaches out, asking, making sure you're good to go. Community of like-minded traders. So once you understand the trading, it's like anything else, fitness, anything you could pick. You want somebody there to kind of be in the same environment as you. Unless you have people around you who are trading something similar, are into it, great. Most of the time, we're with people who are coworkers, who most of the time are negative because they don't want to be there. But you don't want to be surrounded by that. So this helps you to have that community. Other thing is hands-on learning with action. So we don't just teach. Okay, we also make sure that we provide tests and homework to grade it to make sure, hey, are you actually understanding that, so we can give you some feedback. In-depth course covering all essential concepts. So to really build this up, we give you videos, but it's videos where it's from beginning to end. We teach you the candles, we teach you the charting. So we just take step at the, do we teach you every single thing in the stock market? No, we don't need to know all that. Just what you need to know so you can have a coaching session and go from there. And then you have nurture your trading skills with expert guidance. So what that means is once you get everything going, understand this is where actually things happen, because you're going to start seeing different scenarios come up. Like today I had one that was unexpected. My chart did not load up properly. Who knew? Never had that happen before. But nurture your trading skills with experts. So now you have somebody here. Whoa, whoa, whoa. I know we learned all this, but now this happened. Help me. And that could be through a text, through a live, through a community message, whatever it is. Finally, guiding your trader's mindset from lost now to seasoned professionals. So what does that mean? Means once you get those things and you understand it, we want to make sure that you eventually could do this on your own. That you could do this on your own. You could go in and make it happen and then teach it to your kids, teach it to everybody else. That's really what it's all about, to really get you to that point. So any of those steps, it's a lot of work. It is a lot of work to do, especially for the coaches. It's a lot, but it works. We've seen people try to do group coaching. And we did it ourselves. It just didn't work. So that's how coaching is. And just to give you guys kind of an idea about us, who we are, we actually been around for about 5 years now. So we've really fine-tuned the program into a true academy. We've had over 800 students in our academy. A lot of them are here. And just so you guys know, the community, everything it's through school as well. So it's very similar to what you're used to. And I think this is pretty cool. Actually, I just got a letter. I don't know where it is now. Right here. Just got this letter. It's pretty cool. So this is from the Better Business Bureau. And it's pretty cool. It's like a really congratulatory letter because we just got accredited by them. And just so you guys know, in the financial industry, that is very hard to do because there's just too many scams, too many things that go on, and it's a difficult business. It's because most people just kind of sell you a dream. And Better Business Bureau is the people who really watch carefully what happens. So it's cool to be accredited by them. If you go on their website now, we are like the official partner through them, with an A+ rating. So I thought that was kind of cool. Right here, hold on, somebody. That's all. Oh, thank you, appreciate it, Jessica. Thank you. Jessica's one of our students. We are one of the few that still do one-on-one coaching. Most will just do group. I'm telling you, I don't care what you do. Pick a coach, pick somebody, but make sure it's one-on-one. The group, we tried it. I for a business sake, it's great. It's great for growth because it's so easy. One coach, just makes sense. I wish it worked, but it does not. It does not. People have questions. People get frustrated. We did it for like maybe a month or something. I don't know. We didn't do it for long. We realized that's not going to go towards our vision. So very, very important. And we also discussed, we only take 20 students a month to ensure we provide full experience for each one of our students. So that's extremely important to me. We can't have too many students because when we try to, move too many, it's just, you need to be able to have the white glove service for everybody. Luckily, we kind of figured that part out. I don't think we've ever had somebody say that we cannot get a coach. I mean, so it's very, very important that you have the support that you need at all times, as long as you use it. Sometimes people just don't tend to use it. I don't know why, but you want to make sure if if you join something like this, then you definitely have access and you utilize it. Okay. And just so I want to be very transparent because people always ask, our academy is not free. It is a 4-figure investment because it is a one-on-one. It is a lot of things that are involved. So if you are interested, it's going to be, it's like crazy, but it's still a 4-figure investment. So if you're looking for free stuff, you're currently in it and you have our community here. So we do have some trainings here. Are we as involved? Obviously not, because it's, we have people who are paying us to make sure that we're there for them. So that's like, we want to make sure that they're taken care of. And that's what it takes to become successful. But if you want to be a part of an elite group who takes this to a whole other level to change their life and free themselves, then I do got something for you. We do something called a consultation. It's basically a free one-on-one consultation to see if we are able to help you based on your current situation. Everybody's different. Everybody's got a slightly different schedule. Everyone's got different goals. We need to know that because it's not a fit for everybody. We do offer financing and funding opportunities if we feel like you're a good fit. So if just like any college, if we feel like you're a good fit, you'll be a good testimonial and you'll be a great advocate for us. But for us to be, the reason we get that A+ rating from BBB is because we're extremely picky. We had somebody not too long ago. They like to gamble. Like they're big in the casino. Like, oh, your stuff looks cool. We're not taking that, and we have to kind of decline it just because at the end of the day, like they're going to fail because they're too emotional on this. So we don't want to put people in harm's way. We provide discounts to all active duty military, veterans, healthcare workers, or teachers. So that's big for me, especially after COVID, man. A lot of these people went through a lot. So if anybody is in that, excuse me, sorry, then we got you. We'll definitely have a discount for you. And we're pretty confident what we do. So we don't stop. We don't stop until you get it. And we do have a conditional guarantee. So if you're not profiting after 120 days, we won't stop working with you until you do. I don't think we have to actually have to use this guarantee, but if we need to, we will. We don't stop. So as now, part of it is making sure you do the work. A lot of people are like, no, bro, I don't get it. Well, did you watch the videos? I watched 2. Did you watch it in your car? I watched it in my car. Okay, you got to sit down and actually watch it. Did you actually put in the work? So you got to put in the work. We're going to see the trading logs, but we've never had to actually use it because people who put in the work, they understand. Other than that, if you are interested in this and you feel like you could be a good fit and just want to talk about it, Chris has a link for you. If you could provide that, Chris, and all you got to do, you just got to book your call and we will discuss it with you guys. I think the link is there. And maybe you have other questions as well. Also, if we promise to, if you were here till the end, the Paycheck Collector calculator, and the ebook, if you didn't get it, Chris, all you got to do is provide it for Chris. Get that for him, and we're good to go. With that said, does anybody have any questions? No question. Okay.
Looks like Shariah has her hand up.
What's up, Shariah?
Hi. How much is the discount for the military members, and what if you're not deployed yet?
No, I'm sorry. What was that? The second part?
What if you're not deployed yet? So like I'm going, I have a contract in, I have a date to deploy, but what if you're not deployed yet? You have to wait till you're deployed?
No. If you're already in, like, we're not gonna be like searching. We're not gonna call like your recruiter and start. No, if you're already part of it, well, congratulations on
Thank
the.
you.
But yeah, that's fine. And depending on your situation, you could talk to Chris. He'll go over all the prices and all that type of stuff for you with the discounts.
Okay. Okay, cool. Thank you.
Not a problem. Anybody else have any questions? James, thanks for staying on the screen. I appreciate you keeping me company. All right, everybody. Well, I appreciate it. Thank you for taking the time out. This was a long one today. And I will be posting a replay, but I will be changing some of the trading part to make sure it's a little bit smoother than what we had. So just stay tuned. Appreciate everybody. Thank you, Jessica. Thank you. Please send, yes, please send. Oh, a lot of messages there. Thank you, Lewis. Appreciate it, guys. Thank you. Thank you so much. All right, guys. I will be seeing you probably next week. Again, if you have any questions about the program, anything like that, reach out to Chris. That's what he's here for. Just he's a message away. And I would love to talk to you guys as well. Thank you. Thank you. Thank you. Appreciate it. Talks to you soon.